Mortgage rates have jumped significantly over the past 6 months or so. Did you miss out on refinancing? Or did you try and refinance, but your bank wouldn't let you or you didn't qualify? There might be some silver lining. There might be an opportunity thanks to a new program designed to help people that have missed out on the refinance boom. I'll explain coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, look at this chart here about 30-year interest rates, 30-year mortgage rates. Obviously from a significant high several years ago, just going back to mid-2018, the average Freddie Mac U.S. mortgage rate was around 5%, and you see it went straight down as we went through 2019. That's right, even before the pandemic, the Fed started to lower interest rates, started to try and encourage the economic growth, and then 2020 happens and things continue to go further. And yes, the 30-year rate bottomed a few months ago, almost at 2.75%, okay? It's jumped significantly since then in 2020 as more and more people are realizing, wait a second, the government has printed so much money, they're going to make sure the economy gets lift off and that we create inflation, and yet wait, the government's keeping their interest rate really low. Therefore, traded interest rates or interest rates that move in the open market, those are adjusting higher because of the economic growth that's likely coming, okay? The Fed has reaffirmed they're keeping interest rates low and so on, so rates have come down a little bit, but they were up over 3% just recently, that 30-year mortgage. So what does this mean? What does this mean to you? Hopefully you've refinanced. There has been an astounding number of people that have taken advantage of refinancing at these historically low rates. I mean, last year as rates kept going lower and lower and lower and lower to 3% to less than 3%. I mean, those are record lows. Every time it kept going lower, it was record lows. We've never seen interest rates this low. So hopefully if you financially were able to, then you refinanced and locked in those lower rates. I just met with a friend of mine who had a lower interest rate, adjustable rate mortgage that he'd had for a long time ago, okay? Because he was able to get an adjustable rate mortgage at a lower interest rate. And so he held that, knowing that at some point he'd need to refinance and being aware of the risk. And I was telling him as rates kept getting close to 3%, even below 3%, I said, bud, I would lock this in. No more adjustable rate mortgage. You know you either need to pay this thing off or refinance. It'd be hard to see mortgage rates getting too much lower than this refinance. He locked in a 30-year rate, 30-year mortgage at 2.85%. Fantastic, okay? We can't see those rates today. They're a little bit higher than that. So if you didn't refinance, do you have an option? Actually, you do. And this one isn't a scam. I mean, most of these, you go to any website and there's usually a scam in the advertisement saying, new homeowners program allows you to qualify for blah, blah, blah. Well, this one actually is real, okay? There is a program that has been introduced to help certain folks, there's strict eligibility, certain folks reduce their mortgage payment and their mortgage interest rate if they haven't refinanced. Let me tell you those details. All right, this new program to help you lower your interest rate, lower your mortgage payment if you haven't refinanced, it's targeting individuals. It's really designed for individuals with lower income. So several criteria here. I've got them on the screen. Let's talk through them right now. Number one, your mortgage needs to be backed by Freddie or Fannie. And that doesn't mean that you got your mortgage directly through them. It means you got your mortgage through a bank and then your bank had it backed by Freddie or Fannie. Almost all of them are, okay? Almost all of them are. Here's the big criteria. It's the second one. Your income needs to be at or below 80% of the median income in your area. Wow. Okay, so your income needs to be at or below 80% of the average. Median is just a way of averaging a different type of average of income in your area. Well, big questions. What income are they talking about? Is it your current income, your pay stub? Is it last year's income? Is it adjusted gross income? What is it? What income are they talking about? And then your area. What's your area? Is that your neighborhood? Is that your town? Is that your your greater metropolitan area? How do they define that? I don't know those answers, okay? Third, you cannot have missed a payment in the previous 6 months despite all of the relaxation of this. And then you can't have missed more than one payment in the previous 12 months. So basically they're saying, if you missed a payment during the pandemic, during the craziness in 2020, early 2020, that's fine. But over the past 6 months, if things are recovered, you better have made your payment on time. Interesting. You need to have at least 3% equity. You need to have a FICO score. You need to have a credit score of at least 620. If you qualify then, if you meet all these criteria and any others that I haven't mentioned, then the new program it forces the bank to reduce your monthly payment by $50 and at least $50 and reduce your interest rate by 0.5%. Okay, so if you meet all those criteria, it requires that the bank do this. All right, now let's break this down. Number one, who is this really designed for? It is designed for those folks with lower income. And to me, that's where they've got to add more details to say, well, what does that mean? Yeah, 80% income, 80% of the average income in your area, they need to add more definition so that you know whether this applies to you or not. I would tell you, if you think that applies to you, talk to your bank, talk to your mortgage lender right now and say, hey, can you tell me if I qualify? Because I'm not seeing all those criteria, how they define all of this, okay? It's targeting lower income individuals. But to me, whether you have low income, high income, sideways income, whatever, to me, if you've got a good credit score of, above 620, which a good credit score is typically above 700 or 680, okay, but above 600, okay, and you've got some equity in your house, and you haven't been missing payments, you likely have already refinanced. In fact, reducing your interest rate by 0.5% probably is worse for you than just doing a refinance, okay? I do wonder how many folks that actually meet all this criteria will actually be able to benefit from this plan, okay? So that's one. Who's this qualify or who's this benefit? I think very, very, very few people. But if it does benefit you, my goodness, jump on it. And what would I have you do? Contact your bank. Contact your bank where you have your mortgage, okay? Second, I wonder, what's the cost? What is the cost of doing this, okay? And who's paying it? I mean, to force the banks to do this, well, they're going to have to do work and they're going to now get less interest. So who pays the closing costs? You might know that doing a refinance, there's closing costs and so on. Who pays those closing costs? Are there no closing costs? Does the government pay them? Is that baked into your new mortgage? They reduce your payment, but you've got a now higher balance, which is what they did for most mortgages back during the pandemic. They said, listen, you don't need to pay. You've got 6 months. You don't need to pay. But it's not like we're forgiving these payments. It just means your mortgage balance is now going higher because you haven't been making your payments, okay? So we're tacking these missed payments onto your mortgage balance. By the way, if you did that, you wouldn't qualify, all right? So if you were really struggling and you took advantage of the program that the government put in place through those banks, you wouldn't qualify for this one. That's why I think very few people will actually be able to qualify and benefit from this. But if you do, who's paying for this? My fear would be that the bank is going to add some charge and put it on top of your mortgage. Therefore, what seems like you saving money actually means you're saving monthly payment, but you have a bigger balance, so you might not be gaining. I don't know. Is the government just paying the banks, right? I don't know that either. So to me, I wonder who's paying it. And if it's just the government paying it, then effectively all taxpayers are paying it, okay? And so anyway, I have concerns about it's not going to help a lot of people, and I don't know what the cost is. Make sure. So basically, here's the action item. If you think you qualify because you know your mortgage is backed by Freddie or Fannie, you know you've got at least 3% equity, you know your FICO score is strong, above 620, you know you haven't missed a payment or you've only missed one in the last 12 months, and you're not sure where your income falls, and you think your income might be at average or a little below, I would tell you contact your bank. Contact your bank and see, okay, I haven't refinanced my mortgage recently. Can you Can you automatically adjust my payment or reduce my interest rate automatically? And if so, what's the cost? As I get more of those details, I'll certainly share them with you here. But for right now, if you think you qualify, contact your bank. I don't think many people will qualify or will be able to benefit from it, but certainly contact your bank if you think that is you. Work with your certified financial planner. I mean, they'd be the one who knows your financial life as well as you do, if not better, and what strategies you should be applying. And they could be able to, they'd be able to say, yep, let's explore this, or no, you know what, let's refinance that mortgage instead of trying to do this program as well. All right. So work with your CFP. If you don't have a CFP, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. Or wisemoneyshow.com. You can send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.